What's up? It's Daryl Thomas back with you all. Another live stream. I've been uploading quite a few interviews on the YouTube channel. A couple of weeks ago, I was at the Rural Symposium. Many of you all know that. I knew that. I did do a short update while I was down in Boca Raton, just explaining some of the sentiment around the natural resources market, around investments in natural resources, and that includes uranium, which is used for nuclear energy. And we all know the thesis around that, the supply and demand gap. When supply exceeds demand, prices fall. When demand exceeds supply, prices rise. And so, covered that. You all know about that thesis. So we had uranium companies there, we had silver companies there, we had precious metals companies, we had miners across different um, aspects of the cycle, from early stage exploration to where they go, they buy land and they drill, and they have geologists come look at the soil to make sure if there's gold there, if there whatever metal it is they're looking for, if it's there, gold, silver, copper, all the stuff that is used to make the world go round. All the stuff that's used in the device I'm using right now on the computer and the camera I'm using for you to see me. So, yeah, different companies across the spectrum, royalty and streaming companies and such. And so the Real Symposium was amazing. And I learned a lot there. So, and a lot of opportunities came up too. So I'm happy to share more about that with you all. Um, One big update I want to share with you all. I am going to be doing some content with the Vancouver Resource Investment Conference media channel. So I'll be sure to link my interviews that I do there to this page, so that you all can head over to the VRIC Media Show and check it out there. So I'm happy to be working with Jay Martin and his team, awesome people, and looking forward to building and getting my name out there more, as well as getting to interview some of the guests haven't had a chance to interview yet. And so looking forward to that. So today we're going to talk about gold and why I am firmly convinced that gold is heading a lot higher. Now, many of you all that have been watching this show know that I've been talking about gold since I started this show in 2020. Okay. 2020. It's been 5 years. The gold price measured in dollars was around anywhere between 1,800 and 2,000 around that time. And it's a lot higher than that now. It's 13, $1,400 more expensive measured in dollars than it was at that time. And so the dollar has fell significantly against gold. All right. And so it's important to recognize that as we dive into what I'm going to share today. And so first, I want to start off by looking at the charts. Okay. So you all know that I do some technical analysis a little bit. I'm not a super duper expert on it, but I do know a few things. But here, I'm looking at the gold price measured in dollars. Right now, gold has closed around $3,335.60 an ounce. As we can see, the gold price has just been ripping higher since October of 22. Okay. And I remember when I was at the Rural Symposium for the first year, that was in the summer of 2023. I remember we experienced the sharp sell off in gold. It doesn't look too sharp here, but gold was at about 1,900 an ounce. And I remember it sold off to about close to 1,800. I think it was 1,825. That was the bottom it put in. And then ever since then, it's just been rallying and roaring higher. Okay, so gold is a store of value. And when we think about gold, it's important to understand that the physical gold is to ensure our wealth against any type of crisis, whether that be geopolitical crisis, economic crisis, a crash of a currency, a crash of the dollar. We know that historically, countries print money, they devalue their currency, and the currencies eventually fail. And we see this across history, whether we look at the Dutch, the British, and currently we're in the United States era. But as we look at those eras, I mean, even going further back to Rome, where they used silver and gold, and they started chipping off the silver and gold, and it was a way to print money. Okay, so uh, printing money and running excessive deficits is what causes these um, the dollar to fall, which ultimately hurts people, right? And it causes the value of gold to rise relative to the dollar. So the dollar falls against gold. So what we're looking at here is we see gold's at $3,335 an ounce. Okay, we see that now. We have here a um, these are just some technical things that I'm doing, just seeing if there's some bull flags there. So what happens with a bullish flag is you have a sharp move up, it consolidates sideways, then you get another sharp move up, consolidates sideways, and you get another sharp move up, and it consolidates sideways. So if I were to be looking at these as a bull flag, that means I'm expecting another sharp move up until the pattern changes. But I don't necessarily think the pattern's going to change for a while because we are in a different macroeconomic environment. And so I'm going to go ahead and go over to the dollar. Okay, so we see the dollar has went down significantly. And as you can see, the red line here, pink line, this is gold, and this is the dollar. So these are typically inverse. So that means when gold moves up, the dollar goes down. Okay, so we can see it throughout history here. As you can see here, in 2009 to 2012, gold was sharply higher, and then gold sold off significantly. After the Fed came in, printed a lot of money, they boosted the markets. People started putting their money into more risky assets and back into the stock markets and stuff. And gold sold off for a long time. And then the dollar started to rise. So even as you can see here, when gold falls, the dollar rises. Okay, so the dollar is always going to continue to fall against gold. Um, because it's just a currency that isn't backed by anything. It used to be backed by gold, but Richard Nixon took us off of that gold backed dollar back in the 70s, where he closed the gold window because many nations were coming to reclaim their gold after the US was the custodian of the world's gold. Other countries came and reclaimed their gold because they saw the US printing a lot of money. So when I say the word money printing, um, it's a lot more technical than that, but I want you to just to get the idea as simply as possible. So when I say the word money printing, I mean that the U.S. is running excessive deficits, uh, increasing the debt at a significant level, and it's going to continue to do that. It's been on this trajectory for a long time. So as you can see, the dollar against gold, the dollar continues to fall. Um, And so it's important to understand that. Okay. All right. So now we're going to go look at a few other things. Okay. Just to show how how do I know the price of gold is heading a lot higher. So one, we looked at the technical charts and we explained that the dollar continues to fall against gold. Okay. For those of you that are new, I know I'm streaming to my Facebook. Um, I'm talking about the physical metal right now. I'm not talking about the gold miners. That's another you know topic. It's related, but it's another topic. It's a business. Right now, we're talking about physical gold, whether that be gold coins, jewelry, things of that nature that you hold in your possession. Um, so let's go ahead and look at a couple other things. Right now, I'm going to share screen. We're going to look at how the U.S. Deficits and debt are heading a lot higher. Okay, so I had the pleasure of listening to David Stockman when he came to the Rural Symposium, and he showed the numbers. and the data behind why the deficits are going a lot higher, even after the passage of the big, beautiful bill. So we're going to look at two different sources. So I'm just going to just have ChatGPT simplify some of this stuff. Okay, so one source is the Congressional Budget Office. This is a nonpartisan federal agency that uses official legislative language. It produces baseline estimates. They use static scoring based on current law, and dynamic scoring, when used, incorporates projected economic growth effects. And reports are used by Congress for official cost estimates. And then you have a nonprofit group, which is independent. It's the Committee for a Responsible Federal Budget. And so so their numbers look a little different, right? So the Committee for a Responsible Federal Budget often updates and contextualizes CBO findings, incorporating interest costs, long-term structural debt effects, and alternative policy assumptions. Okay, so now we're going to look at the we're going to start with the Committee for Responsible Fiscal Responsible Federal Budget. Okay, so this is their site. They put out this article last month, and they were weighing the cost of the big beautiful bill. Okay, and this has changed a little bit because they factored in the numbers, how the big beautiful bill was originally structured. What were the impacts there? What was it? What were the impacts when passed by the Senate, and then what were the impacts if made permanent? Okay, what do I mean by made permanent? Oftentimes, these policies are passed and they're never really retracted. So, for example, the tax cuts that were implemented in 2017, they were voted to be made permanent today. So ultimately, those taxes impacts the revenue of the government. So if the taxes are low, which they are historically low, that impacts how much revenue the government pulls in. Okay. All right. So the CRFB, they said that the big beautiful bill would add 2.4 trillion to primary deficits over the coming decade, adding 3 trillion to the debt, including interest. If its temporary provisions are extended without offsets, we estimate that it would add 5 trillion to the debt, including interest. Okay, and these are all their numbers. If you want to go read through this, I can link to this in the description. These are all the numbers that they've calculated, and these are measured in the billions. Okay, so so what they came up with ultimately, if we go down to the bottom of the sheet, is that the primary deficit impact, this was back in June. I have to find the one for, they may have updated this for July, was 2.4 trillion, 4.3 trillion if permanent. So if the government retracts or doesn't allow these laws to expire and they vote to extend them, then it's going to increase to 4.3 trillion rather than just 2.4 trillion. So the interest on a debt right now, as the primary deficit impact, was 551 billion, and it's going to be 736 billion if permanent. And this is how they get to the total debt impact with interest, 3 trillion, and then 5 trillion if permanent. Okay, so it's a lot of numbers, right? A lot of numbers, huge numbers, right? Massive. And remember what I said earlier, right? Gold is money, everything else is credit, right? And so if governments, like I mentioned, empires after empires continue to print money, continue to devalue the currency, continue to devalue the money, the nation's currency, and this is an example of that, right? This is an example of that. Okay, so now we're going to look at the Congressional Budget Office's numbers. All right, so here they have an Excel spreadsheet, which, I mean, I can show it to you all, link to it if you want, but you can just go to this link here, view this document, and you can view um, every single line item. Okay. All right. So here, just a summary. It says CBO estimates that Public Law 119-21 will result in a net increase of the unified budget deficit totaling 3.4 trillion over the 2025 to 2034 period, relative to the CBO's January 2025 baseline updated to reflect enacted legislation. That increase in the deficit is estimated to result from a decrease in direct spending of 1.1 trillion. So they made some decreases in direct spending and a decrease in revenues of 4.5 trillion. So that's the difference. Okay, so revenues are going to be decreased. They're keeping taxes low, and then the spending is decreased as well, which leaves it at a $3.4 trillion deficit. Okay, so now this isn't factoring in um, tariffs or any of that income from that side of things. Right now, the tariffs income isn't very much to move the needle. I think we had a surplus of like 250 billion or something around there. I saw some numbers. I got to go look at them again. So do not quote me. Um, but we had a surplus, and yeah, that's impactful. But I'll be looking for a more significant increase for it to be really impactful. Like, let's say 600 billion, 800 billion. Then you're like, okay, that's a lot of surplus that's coming in. So those are just some things to think about as we get into the next part of this live stream. So we have, let's see, I'm trying to see. Okay, got some folks in the chat. Neophyte D is back, still in Florida. Got a little tan. Man, you know, I wish I was still in Florida. It was a good time, but it's time to get back to work. So I was sharing with the audience earlier that I am going to be doing some work with Jay Martin and Vancouver Resource Investment Conference in their media channel. So I will be linking to some of those interviews that we have coming up. When they are posted, I'll link to them on my channel as well. So be sure to be on the lookout for that, brother. Okay, so now we're going to look at the World Gold Council's 6-month report, because I think that this is very important as we look at why the price of gold measured in dollars is going to go up, why the dollar is going to fall more against gold. Okay, so let me go ahead and pull this up really quick. All right, here we are. We're on the World Gold Council's 2025 mid-year outlook: downhill or second wind. Okay, so if you haven't watched yet, I released a interview with Joe Cavatoni. He is on the World Gold Council, and he shared a lot of their insights that they're getting about the gold market, and we unpacked that significantly. The interview did not do very well, but I would love for you to all to go check it out, because it's definitely some valuable information there. Okay. All right. So pretty much they're asking, like, okay, is gold going to continue rising? So it set a record pace, rising 26% in US dollar terms in the first half of 2025. So 26% return. Now, when you compare that to inflation, that's beating inflation by multitudes of percentages. So if you believe in the CPI or the CPI at 2.8%, whatever, 3%, 26% beats that significantly. If you look at shadow stats, which is around 6 to 7% inflation, then it still beats that as well. So gold has beaten inflation, regardless of what metric you use to measure inflation. Okay. The dollar's weakened, like I mentioned. The dollar went down; it weakened against gold. So this is what they're looking at. Okay, so what they're looking at here is the the Fed funds rate, the expected Fed funds rate. Okay, so if the Fed funds rate is 50 basis points, that means 0.50 lower by the year end, they're seeing that the economic um, scenario that this is going to be positive, moderately positive for gold. Okay, so as you can see here, positive, super positive, moderately positive, all the way to negative. The economic expansion is going to be, moderately negative. Risk and uncertainty is going to be moderately positive, slight upside, which is range bound, a slight upside. Then momentum is going to be moderately positive. Now, if they lower the interest rates by 1% to 1.5%, it's going to be extremely um, positive, you know, and notably higher. Economic expansion is going to have some downward pressure, but risk and uncertainty notably higher. Momentum is going to be moderately higher. So if the Fed comes in and lowers interest rates, the World Gold Council is saying like the price of gold, measured in dollars, is going to go higher. Now we know that. First, the expected funds rate, if it's to go higher, so if let's say the Fed raises rates, that's going to have some downward pressure on gold. That's what they're saying. And we know that gold has held up significantly during these high rate environments, which is typically unusual for gold. But it's important to understand that. So it's important to understand what's happening right now. President Trump is putting pressure on the Fed, on Jerome Powell, to cut interest rates. Okay. He's putting a lot of pressure there to cut interest rates. So there's even talk about, there was, I think Jerome Powell fact checked Trump or something on camera. I got to go watch the video, y'all, but it's just some crazy stuff going on. But I didn't know President Trump was that much taller than Jerome Powell. But you seeing these people on camera, you don't know how tall they are. So as we can see, President Trump wants rates lower. Donald wants rates lower. Okay, so if he gets his way with the Fed, let's say he appoints a new Fed chair that's dovish as heck. And as we can see, the United States pivoted from the Doge trying to come in. They brought Elon in to come in. They started firing a bunch of people, cutting funding, US aid, and all this stuff, right? And they totally pivoted from that. Okay, so I was talking with Rick Rule on my show about how these numbers don't make sense. They're not going to be able to cut 2 trillion. This is baked in the cake. Like we should have been on this path a long time ago. And as I mentioned earlier, David Stockman was part of Reagan's first term, where he was the director of Office of Management and Budget, and that was his task, was to reduce government and cut spending. Didn't happen. Politics triumphed over that. Okay, that's why he wrote the book, The Triumph of Politics. Now, so when we're thinking about this, it's important to understand that if President Trump, the Donald, gets someone that's dovish, that's willing to do whatever he said, whatever, cut the rates, whatever, right? Then he would hang on really quick, y'all. Hey, I'm on a call, so go over there, please. Go sit down. Sorry, y'all. My daughter came in, interrupting the live stream. I need to put a lock on the door for the kids. So, anyways, um, if we get a dovish Fed chair, hey, go. Are you leaving? Go. You're interrupting me. So, anyways, if we get a dovish Fed chair, then the Fed chair, it's likely going to cut rates or drive the rate cutting cycle, and gold is going to move a lot higher. So, sorry it took me so long to say that, but that's pretty much what it comes down to. Okay, so we got Neophyte dropped a comment. As far as gold, I know Kevin O'Leary said 5% of overall net worth. When it goes above that, take profit and maintain. How would you advise slash recommend a person on accumulating gold to their net worth? That is a great question. Obviously, for me, I have a significantly more than 5% in my portfolio. Um, the uh, the World Gold Council, there's folks saying that you should have at least 10%. Um, but you're most at risk if you have no percent. so let's start establish that baseline. Now, for me, I think that gold's going to go to somewhere around $10,000 in the next 5 to 10 years, just because the trajectory that we're on is not going to be reversed. Like I mentioned, the whole Doge thing out the window, past the big beautiful bill, increases 3.4 to 5 trillion to the deficits. So, and the debt, I mean, the debt's already at 37 trillion, unfunded liabilities over 150 trillion. So when you think about that, it's like, okay, I rather hold gold. Obviously, you're going to need cash for some reason or another. So you got to have some liquidity, whether that be cash. I do treasury bills right now as well. But overall, I would say continuously buy gold. For me, that's what I do. I continuously buy gold and silver. I think silver has a lot more upside potential as far as percentage and gain. Um, and I think that gold is going to be at $10,000 within the next 5 years, 5 to 10 years for sure. So that's my take on it. Now, I don't want to miss that run. I also want to say that when it goes above that, take profit and maintain 5%. Um, that's kind of a way that you can play the game. I mean, you can obviously sell your gold when it goes above a certain percentage of your net worth and reduce the amount you have. Okay. But for me, it's like, okay, what else are you going to go into? So it just depends on that alternative asset that you're going to sell gold for. Are you going to sell it to sit in cash? And whether your conviction is that the price is going higher or not, which that's what we're looking at the evidence for right now. So gold is insurance to me. It's not something that physical gold is insurance. If I want to take profits and reallocate to uh, some other thing, I'm going to play the miners, the royalty and streaming companies, things of that nature, the stocks. But physical gold is my insurance, and it insures your wealth. And so it helps me sleep at night, things of that nature. So I can't necessarily put a price tag or a percentage on that. Obviously, I don't want to be 100% in gold, but I do want to have a good amount at home to where I feel comfortable with. And so that would just be my answer to it. It's not a clear recommendation or advice. Everyone has to do their own due diligence and kind of decide for themselves, like what allocation feels most healthy for them. Some people have too much. I've had too much at one point to where I had way too much, and I felt in metals, and it's like, okay, well, I could spread this out and make some money elsewhere, and then eventually accumulate some more. So it's just that the more you accumulate money and wealth, you know, allocate some of that to gold. That's just how I think about it. I get a raise at work. I make some extra money on the side. I don't just keep it in cash. What I do is pay off debts, add to gold, add to my stock portfolio, things of that nature. So yeah, that's just how I live my life. That's just how I allocate. So hope that's helpful. Let me know if I just botched that question too. All right. So okay, so now just looking at some other parts of the report. So for the record books, um, so it says gold closed out the first half of the year as one of the top performing major assets, rising 26% over the period. Okay. behind this was a combination of factors, including a weaker US dollar, like I mentioned earlier, range bound yields with expectations of a future rate cut. Yields have been staying the same. We haven't got a rate cut, I think, since last September, something of that nature. And heightened geopolitical tensions, some of these directly or indirectly linked to US trade policy. Okay, so uncertainty. So people are protecting their wealth, saying that, hey, I need to protect my wealth. All right, so as we see here, gold has beat all of these assets. It's beat the domestic market stocks. It's beat the emerging market stocks. It's beat global treasuries, ex US. It's beat balanced portfolio. Balanced portfolios at less than 10%. And I mean, stocks here are, less than 20%. Gold was at 26%. It's beat commodities, US bonds, and it's beat US cash. So gold is the top performing asset of them all. All right. And then when we look at direct and indirect trade risks push gold higher, they have some thoughts here as far as like how the trade policy, the big disruptions to trade policy has pushed gold higher as well. Now, obviously, the big factor, this is a big factor. Gold is at all-time highs in multiple different currencies across the world. So you can look at the US dollar, it's up 26%. And the euro is up 10.7%. The Japanese yen is up 15.4%. The British pound, 14.8%. The Canadian dollar, 19.2%. That's the return. So the gold's been returning significantly in multiple different currencies across the world. Okay, so record high prices in each currency as well. So as we can see, gold is breaking the back of the fiat currency market. All right. So now, one thing we haven't considered yet is the central banks are still buying gold significantly. They're making significant purchases. I'm trying to find it within this report. I'm not sure if they alluded to it or if I passed it. But central banks are still accumulating gold as well at record pace. And so they actually had a higher number of tons of gold that they bought. And as we know, central banks around the world are buying gold to hedge against inflation. The dollar has gone down, right? And the U.S. has weaponized the dollar, and such. And so they're trying to mitigate third-party risk that's controlled by another country, which is the dollar, treasury bonds, all of that stuff. And they are buying gold, so to de-risk. So there's a lot of tailwinds for gold. And I think that the gold is going to go a lot higher. That's just where I'm at with it. I'm interested in what you think as well. And so I think it'll be helpful to answer the question, is gold too expensive to buy right now? So some folks may be wondering, should I add to my portfolio of gold? Should I just stay put? Should I wait for it to fall and everything? For me, I dollar cost average into gold, just like I do other assets like Bitcoin and such. So regardless of where gold is at, I'll buy some. Now, if it's a lot higher, I'm buying smaller fractions, whether that be 1 grams, 1/10 ounces, things of that nature. If the price goes down a lot more, then obviously I'm going to buy a lot more. So I'm still buying at these prices because I have an outlook that gold is going to be like at $10,000 an ounce within the next 5 to 10 years. And that's my long-term outlook. Now, I have a friend that is currently finding her way into investing, and she's learning being exposed to this whole new world. She and I have had a lot of conversations. She just bought her first gram of gold, and it was a celebration. This isn't something that she's um, grew up in or really knew about a lot of and everything. And so she was excited. I was stoked for her. And so even at this price, it's like, okay, this is ensuring your wealth. This is ensuring you against the chaos that is happening in the world, the foolery that's happening in our government and political system, and all of that. It's a hedge against that. And so it's important to know that. So gold for the win. I think gold's going a lot higher, you all. And I'm wondering if you all feel the same. So feel free to put in the chat if you got any thoughts on what was presented today. If you got anything you want to ask, any questions, anything of that nature, love to hear from you all. And while I wait for folks to post any questions in the chat, any comments, um, I mentioned earlier I'm doing some work with the Vancouver Resource Investment Conference. So that's I'm going to be doing some interviews there, and I'll be sure to link to them here on this channel as well. So be sure to be on the lookout for that. Looking forward to working with Jay Martin and his crew, and I think that the symposium this year was outstanding. A lot more people knew me from doing this work on the YouTube and everything. You all have seen some of the interviews that I put out, like interviews with Frank Justra, um, Nomi Prinz, and Lobo Tigre, Taylor Kinney. It was just an amazing time. Got to get to know. I was able to get to know um, a few other prominent voices in the space, and um, get some contacts, and things of that nature. So, I'm definitely building some relationships and looking forward to just seeing what comes out of that. Let's see. Neophyte said, yeah, interesting. Since stacking, I feel like gold has been out of reach due to price, but it's like housing. You need to buy it before it gets super out of hand. Yeah. Um, I mean, gold, it's never really out of reach due to price. Because it's just so divisible. Um, but the key thing is to buy and just hold. Like, I mean, the other day I bought what 4 ounces of silver and a gram of gold, and it's just like, okay, just I'm not planning on selling it anytime soon. So I just stack it and just let it keep accumulating. I'm always constantly looking at accumulation, accumulation, accumulation. And eventually, like hopefully I don't have to use it in my lifetime. But if we go through some serious existential crisis, I have that to protect my family and to lead my family through that. And hopefully I get to the point where I can just pass it down to my kids and they know the value of it and they do the same. So I think that gold is money. It's called God's money for a reason. The book of Genesis says, um, in the land, God put gold there and it was good, right? You can't print it. You can't print gold. It's been money for thousands of years, you know. So even at today's prices, I'm still accumulating. And I think that even for folks that have never thought about buying gold, uh, I think that it's important for them to protect themselves from the absolute chaos that is happening in our world. And gold is a hedge against human stupidity. It really is. Political stupidity, all of it. Gold is a hedge against that. And so I'm always buying because I just think that human nature is the same, and the same playbook over and over that has happened for centuries, millennia of nations rising and falling. it's the same, and it's nothing new. So um, protect yourself. I see you said you may need to hunker down and buy when I can, or maybe liquidate some stock and buy some gold. He said, "Nah, I need an ounce. LOL, no fractional. I guess that's my problem." Yeah, I think. I mean, buying an ounce is. Um, I've yet to buy like a full ounce of gold, to be honest. Which I guess I would have saved a lot more money over time if I would have started, buying ounces. But when I started buying fractional. So I have a lot of fractional gold. Um, I got the Valcambi cards with all 24 grams, filled up, stuff like that. I've always bought fractional. I mean, because when I think about it, yeah, ounces are good, but then and you save money buying more in bulk, because you're buying an ounce, you save more money. It's less premium. But just thinking about like if you need to exchange it for something, it's going to be hard to divide that ounce unless you're exchanging it for something that's very expensive, you know. And so fractional, I think, is more realistic on day-to-day transactions and things of that nature. If you ever need to use it, obviously I would use my junk silver first, and then silver ounces, and then get into the gold or whatnot. But yeah, I mean, there's nothing wrong with fractional. I had a bunch of gold backs for a while. I sold all the gold backs, most of them. But yeah, I sold all the gold backs actually. Um, like when you get down to the 1/1000th of an ounce and stuff, like yeah, that's a lot. And the premiums on them are so expensive, right? Um, so for me, I'd rather buy grams, 1/10 ounce, quarter ounce, half ounce, things of that nature. So ain't nothing wrong with fractional. All right, you all. Well, I got to get going. I got some work to do. So glad to have been back with you all. Looking forward to staying in touch. And I will be going live again. I still got a lot of content to upload from the Rule Symposium. I just uploaded a video today with Rudy Frank of Seabridge Gold. They're sitting on one of the biggest gold projects and deposits in the world, and their stock is super undervalued compared to their underlying assets. It's projected that they have about $9,000 of metal, gold and copper in the ground per share, and currently their shares are trading at about $16. So obviously, it's one of those companies that's looking to bring in a bigger player to start developing and producing the gold out of the ground so that they can sell for a profit and the share price can increase that way. But that interview with Rudy Frank is up right now. So go to the channel, check it out, and I'm sure it could be um, beneficial for you if you consider investing in it. All right, so I just found a piece of shop near me that accepts gold backs. Hey, they doing the right thing. They doing That's dope. That's dope. Yeah. So the ticker is SA. Um, Seabridge Gold. SA. That's the ticker. This is not financial advice. Do your own due diligence. You know that, neophyte. I'm not going to tell you what to buy, but I'll tell you what I'm buying. So at some point I'll do another portfolio kind of show with you all what am I actually investing in, because I know that navigating these markets is tough, and right now my investment account is up significantly on the year. So yeah, I'm staying at it for sure. All right, so ticker symbol SA on the New York Stock Exchange. All right, you all, I'm about to get going. So we'll stay connected and I'll be live again soon.